There is certain charm to learning finance at a beach campus in Goa. At BITS Goa, where we studied, there's this club known as the Wall Street Club. That's where we were first introduced to the stock markets. And the very first thing that our seniors taught us, moving averages. We didn't know it then, but the simple idea of moving averages would form the foundation of an entire swing trading strategy that we eventually built. And today I'm going to walk you through this entire trading strategy. And if you follow this video carefully enough, you'll be able to build it yourself. Alright, so let me explain this thing to you guys on a whiteboard. Okay, so you have your stock price over here. Your 50-day SMA is going to closely track the stock price. And at the same time, 20-day SMA is going to be a little further away because it's a 200-day simple moving average, right? So as we all know, every time there's a 50-day SMA crossing the 200-day SMA, that's a bullish signal. So now because everyone knows about this bullish signal, there's no real alpha in it. So we devised a new ratio known as the moving average ratio, which is the ratio between the 50-day SMA divided by 200-day SMA. This not just tells us if there is a strong bullish signal, but it also tells us the strength of the trend. To avoid any noise, we sample the data monthly, not daily. And then we ranked all of Nifty 500 stocks by their latest MAR value. Alright, and next we are simply going to get a list of the top 20 stocks based on the MAR that we have decided. Alright, so it is the highest MAR to the lowest MAR, get the list of top 20 stocks out of the 500 stocks present in Nifty. Okay, so this right here forms the base of our entire trading strategy. But we didn't just want to ride strong trends, we wanted to completely avoid stocks that had fallen too much from their highs. Okay, so the next step is that we want to avoid stocks out of these 20 that have fallen a lot from their 252-day high. 252-day high is the highest price that they achieved in this 1 year. Okay, so if it is very close to 252-day high, this ratio will be closer to 1. Otherwise, it will be closer to 0. Alright, so we only pick stocks that are closest to 1. We want to avoid stocks that have fallen a lot from their 252 days. Okay, so from this 20, we filter out the next 10 stocks based on this particular ratio. Okay, now I'll just say this. After applying the last filter, we were left with 10 stocks. But after that, we applied one more final filter. This filter got us to the final 6 stocks that we actually ended up putting our monies into. Unfortunately, I cannot reveal the final filter here, but hey, you can apply your own final filter and probably get a strategy that's even better than ours. Well, the strategy that we have has given 24% CAGR in the past 4 years. Again, these are absolutely live returns and not backtest returns. You can get the same strategy by simply scanning the QR code. The QR code will take you to an app where you can search for crossover formula. Alright, so you've almost seen the whole strategy. How we went from college dorms to a production-ready trend-following strategy. Do try out the strategy yourself and don't forget to subscribe for more such origin stories.